Hey everybody, welcome to the game plan. My name is Gareth 𝗖𝗍𝗂𝗍, Chief Market Strategist and Pro Trader here at Verified Investing. This is the game plan. It's 9 a.m. We're going to get right into the charts. So this morning, we are seeing the markets inching back up just a little bit. Let's take it on over here to the NASDAQ 100 chart. So this is the NASDAQ 100, folks, and what we saw yesterday was pretty astounding. Remember how coming into this week, we had 5 up days plus with a 5% gain on the S&P, actually more than that. The NASDAQ actually rising as much as 9% from this low pivot all the way up to here. And what I said to you is, if you look at the data, and I always try to be honest with you guys, it's about the data, right? The probabilities. If you look at the data, the probabilities are that you have a pullback on the S&P up to a 0.8% pullback if you go up 5% in 5 days. Well, yesterday we were down 0.77%. Granted, we did inch up a little bit in the early portion of the week, but we are seeing that pullback. What I think is amazing here is that if you look at the NASDAQ 100, it went right into a key level. Okay, we had this pivot high right here, and that's where for 3 consecutive days, I mean, look at this. This is the daily chart of the QQQ. 1, 2, 3. 3 consecutive days, we hammered on that level. Yesterday was our highest pierce, and it got rejected again. And so as a technician, I say to myself, okay, 3 days in a row of hammering on a level and it still got rejected. That to me is a major level in the near term. Now we'll see what happens today, right? So today it looks like the markets are up just a little bit here going into the open at 9:30. Again, this came on the back of yesterday's heavy sell-off. And let's talk about that sell-off yesterday. So yesterday, what ended up happening, it was a two-pronged attack on the markets. Number one, there was a Treasury auction. And again, these Treasury auctions, folks, are actually really important to the market right now because it gauges the interest of the globe in terms of buying our domestic debt. And so basically, the U.S. government is having to sell about $1.5 trillion in debt over the next couple months, and it needs foreign governments to essentially buy that debt. Okay, and this is where the Fed can lose control because the Fed ultimately, they try to set interest rates, but if people won't buy our debt at X%, let's say at 4.5%, which is where rates are right now, what do you think has to happen to interest rates to coax countries to buy our debt? And the answer is interest rates have to go up if no one will buy our debt. We have to offer essentially a higher interest on that amount of money to lure someone to actually take on that debt or buy that debt from us and give us money for it. So yesterday's Treasury auction, and again, what we can do here, I want to show you this, guys. We're going to flip over to the 10-year yield. If we look at the 10-year yield, this is the daily chart. Now, number one, I gave you guys this support. When we were trading up here, I said this was going to be support. So far, it's been tremendous support. But again, yesterday's price action, what we saw when that Treasury auction hit, and if we flip to the 10-minute chart, look at this move yesterday, and again, I'm going to go back right here. This was when that Treasury auction occurred, right at this point. Look at the size of that move up on the 10-year yield. We went from 4.55% to basically 4.66%. And again, the concept here is very basic. You want money. I want you to buy some of my debt. You say to me, oh, Gareth, you are way over leveraged. I really don't trust that I'm going to get my money back. So to actually give you that loan, I'm going to make you pay higher rates than what you're offering. And essentially, that's what's going on with the Treasury right now. China, Japan, all these other countries are saying, 33.5 trillion, this debt is going sky high. You know, Washington politics are a mess. You guys can't get your house in order. All of these things, and these countries are essentially saying, you know what? We want more interest on this if we're going to take the risk of giving you X amount of money. Okay, so that should explain it pretty simply. Now, again, we are seeing it coming back in today, so rates are coming back in. Yesterday, this move caused a pretty dramatic sell-off in the market. Today, we're rallying back just a little bit as rates are coming in. Essentially now, we're seeing a calming of the fears. Yesterday, again, fear spiked. Today, rates are coming in. That's telling us we're not as concerned as we were as investors about yesterday's kind of crappy Treasury auction. Another thing that occurred yesterday, right around the same time, Jerome Powell came out and said, hey guys, just to be clear, we may still have to raise interest rates. Now, if we look at this daily chart here of the NASDAQ, in fact, let's even go to the spiders, the S&P 500 here. So what we had seen prior is the Federal Reserve meeting was right down here. Right down here is when the last Fed meeting was. And remember, they essentially came out and said, hey, we're going to probably pause, we're going to wait and see, we're data dependent. They said all the things that coaxed the market to rally higher. Okay? Now the problem is this, is that Jerome Powell does not really want the markets to rally up substantially. He doesn't mind a small rally, but when you get 1, 2, 3, 4, 5, 6, 7, 8 up days in a row on the S&P for a gain of like 6+%, NASDAQ up 9%, he's not going to be happy with that. Now you might say, well, why doesn't he want the markets to go up? Well, think about this. If you look, and I talked about this yesterday, if you look at stocks like NVIDIA, right, and we go to the NVIDIA daily chart here, and you see this massive move. From low to high, NVIDIA went 23% to the upside, 23%. Well, that's $1 trillion company. When you go up 23%, if you're just $1 trillion, that's $230 billion. Then you take Apple, right? So again, here we have, let's just do some numbers, right? So $230 billion, billion. Then you look at Apple. Apple went up about 10%. On a $3 trillion, that's $300 billion, right? And then you go to Google, then you go to Amazon, and you have another, $150 billion, and so on and so forth. And then you go into the rest. So when you add up all the Magnificent Seven gains, the billion-dollar company gains, it essentially comes out to be like 1.5 trillion with a T dollars that was added into the system in basically a week and a half. And again, that's why, in my opinion, Jerome Powell came out yesterday and actually said something that was hawkish, and it was kind of random, let's be fair. It wasn't like it was scripted. It wasn't like, hey guys, at this time we're gonna make a statement. It was much more random than that. It was kind of at a different press conference, a different speech, where it got interrupted and he let a curse word fly, and it was like, I mean, everyone's just loving that. It's to be honest, it's nice to see the humanity of that he gets annoyed at the same crap that we get annoyed at, right? So again, that was interesting, but my point is that he has to make this comment yesterday to bring markets in. Otherwise, you're adding way too much money to the system, and it's going to push inflation up. And remember, the Fed doesn't even have inflation under control yet. They haven't brought it under 2%. So you can't be flooding the market with $1.5 trillion in capital gains, essentially, in a very short amount of time, where people are going to go buy more shit, excuse my language, they're going to go out and they're going to do that, and it's going to increase inflation. It's just the nature of the beast, guys. When you have stock markets going through the roof, it increases inflation because people feel wealthier, they go out and spend more money. If you don't have the supply to meet it, it's going to force prices to the upside. All right, going back to the SPY here, I want to just show you guys this. This was awesome. So remember this chart, we talked about the gap needing to be filled right up here. Right? That was a gap. And I kept on saying to you guys in the previous couple videos, I was like, why hasn't this filled? This is kind of troublesome. It's got to fill. Well, guess what? Yesterday's open essentially filled that gap, and then we got this sell-off. It's amazing how that stuff works. And again, it's all about probabilities, and it's about technicals. That's really what it comes down to. Okay, couple other things to go over. I want to go over some charts that have earnings this morning. TTD, Trade Desk, you can see, look at this drop on earnings, got absolutely annihilated yesterday after the close, traded as low as around $53. It has floated back to almost $60, still down a mile from a $76 close, but it is bouncing back off of the lows. Now, where would we day trade this? Well, the first thing I do if I'm thinking about a day trade, I'm saying, okay, well, if it was down at 53, I'm not going to choose a level above 53 because it could easily test that pre-market low. So that's number one. So number two, I flip back to the daily chart and I zoom out, and we got to zoom out on this, and we can see that the chart honestly was kind of had rallied a lot recently. So I mean, you can see this up move and then this chop. But what I'm doing now is I'm saying, okay, 53 is right in here. So now let's look at this area and try to find a technical level that gives us a level to trade. And what I do is I take my trend line and I start connecting the dots. So the first obvious trend line we have is double bottom right down here, triple bottom. That's at $40. I don't think it's getting down there today. I'd be very surprised. The second area here that's a little bit more interesting. There's a gap fill that looks like it never was fully filled. It came close, but there's a gap fill here at, look at this, if I zoom in here. So see this gap fill right here from this gap, and you gapped all the way up here, right? So that right there is my first inkling that that could be a good support level. So what I would do is, for me at least, and this is what I'll be watching today in the live trading room, it's just below 50 bucks, around 49.80 or so. There's a gap fill. If this flushes down there, 53 was the low pre-market or after hours, so it goes down there, goes lower, this is where I might start nibbling just a little bit, just below the even number of 50. And I love even numbers. Using even numbers with levels, when a level coincides with a major even number like $50, it's usually even more positive. All right, Unity Software. Getting trounced again on earnings here. Lots of earnings debacles, by the way. And by the way, this season, more than anything, this earnings season, which as it comes to a close, you've seen more and more stocks warning. And so what that tells me, by the way, is that the economy is slowing. Even if the jobs numbers aren't reflecting it yet, people are starting to pull back on their spending. All right, so we basically have a low down here on the chart of Unity. It got down as low as 21.17, 21.15. It's trading back to 22. Yesterday, it closed at approximately 25.40, so it is down significantly. Let's jump up here. Let's go to our daily chart. And what we'll do now is we have to zoom out to kind of see where we are on this chart here. And if we zoom, wow, look at this. I mean, this is pretty remarkable. So we're actually trading at, there's only one area of interest at 21.35. That's the lowest point on the chart. And look at this. This thing was a $200 stock. Now, remember, a lot of people would say, wow, it was $200. It's got to be a good buy down in this range, right? I mean, look at the chart. If you just simply look at price where it was going into earnings, you'd probably be like, hey guys, this looks great. I mean, how can you go wrong? Look at what a discount is. You can't do that, folks, because ultimately there's a reason why prices were way overdone up here and why it's trading back down here. And again, we're seeing it down significantly. So what we know is we're trading right now at $22.50. The technical level is around 21.35. That actually happens to be right around the low as well of pre-market or after hours. I'm going to put a trend line in right there, folks, right in that vicinity. And that again, so I would say $21, and I didn't do a very good job of putting this trend line in. It's got to be lower. There we go. 21.40, 21.30, right in that vicinity to me looks interesting. Now, what I do here is very important. I don't say, oh, that's my level and that's it. I have to look, because this is at the low of the chart, I need to go to a bigger time frame, because I have to see if historically, going back further, was there a lower pivot? What if it breaks that level? What if I take a 1/5 position at 21.30, 21.40 and it goes lower? Where is it going to stop? Where do I add my next position? So to do that, we have to go to the weekly chart. And what we see here on the weekly, guys, is that ultimately, right, I mean, look at this. Basically, this is going to be, if it gets down below that 21.30-ish area, it's at all-time lows. IPO, looks like it IPO'd back in 2020, and here's your chop. By the way, classic M pattern. Notice that's very similar to what Bitcoin did at the highs in 2021, and this was in 2021 as well, so you see that kind of comparison there, and I think this does have some blockchain, crypto kind of aspects to it. Okay. Now, there is one thing I want to point out. One way to find a level lower, because I think this is a good question. Okay, so it's the lowest point. If it goes below that level, is there a way to find a secondary level? There is, and I'm going to reveal that right now. And this is turning out to be a great case study chart. So the first thing I would do is I would look for a down-sloping trend line, something that's sloping slightly lower. And again, I'm doing this live. I didn't do this pre-game plan with you guys, but one of the things I would look for is potentially something like this, okay? So, you guys see what I just did? And I know it's hard to see. Let me see if I can zoom in a little bit here. There we go. We can bring it up. Okay, so basically what I did here, and these are the techniques that I use as a technician to find levels. So what I did was we have our pivot low, which is at 21.30, 21.40, right? That's that one. Now we take this drop, take that low, and I apologize if you can't see, but right over here, we connect it right through this low, which connects right through this low, and it takes us down to about $17.50. So now I have two levels right here that I can watch for a trading opportunity. Okay, one other option here would be is to utilize some others. And this is really where it becomes a trial and error. Let's take this high here, right? So let's erase these and let's go back to this. Let's take this high here, and what if we connect it through that high as well? There you go. So you're starting to get multiple trend lines. So again, see what I did there, guys? Multiple trend line here to here, and it kind of, notice it's all kind of coming together right in that 21, 19, 18 area. So as a technician, even as a swing trader, if I like this company, maybe that's where I start to think about swing trading sub $20 with all these various support lines coming to fruition. Okay? All right. The last thing you can do here is on an intraday basis, you can look for a bottoming tail or something like that. So a chart on a 10-minute time frame, which is what I day trade off of, you will get certain pattern formations. You might get a bullish bounce, a bull flag, but bottoming tails are a key component. That's something in another video I will go into. I teach it obviously in the Winning Trader series as well. All right, guys, sorry to spend a lot of time on that, but I think that was a good case study for us. Just to go over a couple more charts, I'm going to do it a little faster now, then we're going to get into crypto, so don't worry about that, because crypto was wild yesterday. I was fascinated by the price action and the reversal on Bitcoin staying within that channel. That's the craziest thing about it. TKO group, down significantly about 10% here pre-market, traded as low as 77. Is there a level here to day trade today? Yes, there is. 72 right here. See this gap fill right here? That's right at 72.20. That would be a level that I'd start to look at. You could even start now, maybe at 75 right here, but really 72, 72.20 is going to be a key level on TKO, symbol TKO. Lastly, Plug Power, guys. This one's getting demolished. It already got downgrades today. Closed yesterday at 580 or so, down at 385. This is one where, I mean, again, this is a very high-risk, small stock. But for me, I'm just kind of curious, what if we draw a trend line through here down to this low? Now we're even below that. This is down at like the $4.60 level. So we're even down below that. So I go to my bigger time frame. Yes, here we go. Okay, so, and again, this is me doing it live here, guys, with you guys. All right, so it's hard to see, and I apologize for that. But if you go back here, there's a pivot here, here, and all along here to there, all along here. There it hits right there. There it hits right there, there, and then we finally broke out. That's at $3. So $3 right there. You can see the price point. $3, I would get interested on this. Very high risk, though, when you're dealing with these tiny little stocks. I think this is still, you know, it's kind of like close to $1 billion market cap. In crypto, that's pretty big. In the stock market, that's obviously very, very small. All right. Couple things. Let's jump over here, guys. We got to cover crypto real quick. Remember that channel that we had in crypto where we were trading in this channel here? Well, yesterday we popped through it up to 38,000, and then by the end of the day, we came back to that channel. Today, we're moving up again. Let's see by the end. I'm curious to see if we come back to this level here. Does this channel hold price intact? Very interesting to watch here. Either way, it's continuing to trade inside of this range, even popping above. But let's see, do we get stall out here, and does it retrace here and continue like that? Very interesting to kind of watch and see what's going on here. Oil, guys. Oil so close to my buy level. It still has not triggered. Here it is. Look at it over here. Look at how close. Bouncing a little bit today, but yesterday we were bouncing on oil and then it dumped out. Let's see if it dumps out again. Right around 74, there starts to be a technical level. If 74 hits today, I'm probably nibbling as a swing trade. I still think it's going to go lower, but a swing trade bounce would be appropriate in my opinion. Gold continues to decline here, guys. GDX, I'm going to be honest, GDX is starting to look good. That's the gold miner ETF. But again, look at this roll over here. And as I explained, after such a big move up, this is not abnormal. even going down here would not be abnormal. So just let gold do what it wants to do. Everyone is so focused on instant gratification. You have to let charts do their things. Charts are like living, breathing organisms. You can't force a chart. Let the chart do its thing. It needs to consolidate. It needs to pull back. You have to get more bears involved so that when they cover their shorts or they go long, it pushes it up for that next leg up. The only thing I continue to remind myself on this gold chart is that when you look at a bigger time frame, we have the inverse head and shoulders formation. Again, let me zoom out here on this, and we show this, right? So you still have an inverse head and shoulders, which is a powerful pattern formation, right? So you still have to kind of complete this shoulder over here, which probably means a lot like this, and maybe eventually a rally up. And then you have this, obviously, this level up here on gold that once that breaks, that's the kicker. That's where you start to get momentum. The other thing to remind yourself of, in the last 12 months, central banks around the world have bought more gold than they have ever bought before. And I always say this, is that in a way, you're supposed to follow the smart money. I'm not saying they're smart money, but what they are is the creators of the printing presses and the money. So if the people that are going to print dollars and yen to infinity and all of this stuff are buying physical gold, probably not a bad thing to have a little in your portfolio, frankly. Again, just connecting the dots there. That's all I'm doing. Nothing crazy about that one. All right. Let me see if there's anything else on the radar here across the board. Let me just jump back to this chart real quick over here. Last thing I do want to go over is the Tesla chart. So if we bring this up and let me refresh there. Tesla had a big down day yesterday. I still think it's going down here, guys. 165, 170. You can see the wedge pattern here. It broke. You got some bounces. It's now starting to come back down. Think about this, guys. This was the bounce in Tesla when Apple was going like this, when Nvidia was going like this, when Microsoft was going like this. So again, relative weakness in the chart also is a signal you want to pay attention to. All right, so that's where I'll leave you guys today. Let's jump back center screen. I do not have my basketball. I forgot to pick it up here today. That's okay. I sometimes like to do my imaginary air shots that are obviously the best shots that I could ever take. Anyways, it goes in every time when I do the air shot. It's really amazing stuff. But anyways, thank you guys for tuning in. You guys rock. Come back Monday bright and early. I'll have more levels for you, more trades, more analysis. Have a great rest of your day, guys. Take care. Swish.